Your life is what? Is a resource. You have to invest it wisely. Hallelujah. Glory to God.
Hallelujah. You may be seated. It's good to see everybody. Abigail, welcome. Praise God. This prayer this morning is I wasn't at the beginning, but we need to pray that prayer. Just a prayer for boldness. Boldness and um strength of might in your inner man, like Esther would say, if I perish, I perish. The world is tough. The world is tough, and it's not for the chicken liver. A lot of people have very good plans. Very good. If they tell you their plans, you will think that this one, me and this one, we're not on the same level. But the truth is, many people don't have the audacity to execute their plans. There are some who don't have plans, we understand that, but some have beautiful plans. But the audacity, fear has crippled them. They will tell you, I don't have money. You know, money is the fall guy. Once you say, I don't have money, everybody will say, oh, he doesn't have money. But like Pastor Mark will say, money is the last thing on the equation. Money is the last thing on the equation. And with God, it even comes very, very last. Because God will not give you an idea without the means to execute it. But many times we jump the gun. We leave the things we should do, and we are thinking that once we get money, every problem will be solved. That's not true. If you don't do the basics, when you get money, you will lose the money and come back to square one. Because that money you're getting, I keep talking about, the Igbo apprenticeship system. There are some people that when they get settled by their oga, in a few years, maybe less than 3 years, they lose that money and they come back to square one. And the truth is, if they have settled you, they have settled you. You cannot come back and demand another settlement. But I guess that if you fail at that first trial, you know why you failed. It did not take you by surprise, true or false? Because you're the master of yourself. So if you fail at that point, you know exactly the mistakes you made. And there's always a way out. In Igbo land, sometimes they become drop shippers. That's what we call it in modern English now, drop shippers. But in Igbo, we call it osahia. It means that you don't have a shop, okay? But because you know the business, you know who the people who sell it, and the people who sell it at a good price, because you've been there. Your work could just be stand somewhere conspicuous, and people are passing, and you say, do you want this? Do you want to do this? Do you want to buy this? And there are some people coming to that place that probably they've never been there. Or just for whatever, they say, yes, we want it. This is what we want. And they just go. It's already an established tradition in the market. So whoever you're taking them to, know what is involved. Commission, that's all they get. You understand what I'm saying? There's all money is the last thing. And people have done that and built their own shops, grown their own businesses. Pastor Mark said something the last time. He said, money follows service, follows product. It follows work. If you work, you will get money. I know somebody in the market who was settled, and in a few years he lost his money. And this guy used to be very conscientious as an apprentice, very conscientious, very nice, person. I don't know how he came to where he came. Maybe he made one wrong deal, and not having plenty of liberty with money, that threw him off. And he started pushing barrow. like carrying goods for people. He's done that for like 3, 4 years. He's gotten back a shop. He's gotten a shop now. He has started putting goods there bit by bit. And I know other people who have completely left the market. They are not even anywhere to be found. I know also some who are pushing barrow, but they are more interested in drinking ogogoro every morning. They will drink whatever they will drink, then they will go and push that barrow. Every day. So from day to day, their lives are not getting better. Every day you see them, they are the same. So these things, they are a matter of, like Pastor Mark will say, how, and every other thing will fall in place. The discipline, the information, and everything. Praise God. So today we continue from where we stopped. And today we're going to talk about investment. Investment. That's what we're going to talk about today. What is investment? Can anybody hazard a guess? What's investment? Hazard a guess. There's no wrong answer. Yes. Plenty. Sorry. Okay, so it's okay. Okay. Yes. Investment is simply something, like she said, that you put away, and by putting away, it's like you put it away with a hope that it's going to get bigger. Do you understand what I'm saying? That's simply what an investment is for the future. Can we go? You put it away for the future. It is a deliberate thing that you say, if I acquire this thing with so much, in the near future, it's going to give me more. And that's a way of growing money. It's a way of growing money. And there are many ways of growing money that are not investments. Do you understand what I'm saying? Investment has its own uniqueness. What is an investment? Usually, like normally, is an asset or property to generate an income. Do you understand? To generate an income. You can generate an income from an asset, either by selling it or by the appreciation of the asset. Do you understand what I'm saying? So you buy the asset. What is an asset? I think I've explained what an asset is. Something that adds to you. Do you understand? Something that adds to you. You in business, an asset is something that is an income. It has a value that does not depreciate. It rather appreciates. Something that you own is not a liability. A liability is something you owe somebody. An asset is something that you own. Please leave the slide. So I said that you can generate income from an asset either by selling it or by the asset appreciating in value. An investment is an asset, which means it adds to you. It is something you own that adds to you. So it's an asset. And it generates income. And income it generates is by appreciation in value. Appreciation in value, basically. That's how the income comes. Because even if you sell it, if you decide to sell it, you will sell it more than you bought it. There are some that you buy and they just generate income on their own, which is called passive income. You're not actively involved in the generation of the income. Like a house, if you build a house, it will continue to generate income so long as the house is there, functional. So that's what an investment is. Assets usually generate income when they appreciate in value over a period of time. Most time without spending money to make it increase in value. Most times you don't have to spend more money to make an asset increase in value. Do you understand that? So if you buy something and you need to continue to service that thing for it to generate income, spending money more than maybe you probably even bought it. It's not an investment. An investment will generate money on its own without you having to spend more money on it. That's one key feature of an investment. But it's not everything that generates income that is an investment. Next slide. It's not everything that generates income that is an investment. When you invest, you use money to generate more money. There are other things too that you use money to generate more money, and they are not investments. You use money to create more money over time. Do you understand that? Over time is not instantaneous. So investment is not something that you do today and you reap it tomorrow. No. It has time. There is a time factor in investment. That's another unique feature of an investment. Go back to that slide. Putting your money or resources into something that is supposed to appreciate in value over time. That means you're investing. Do you understand that? Something that will generate money over time. Investment is not many things. Let's see what investment is not. Investment is not trading. It's not trading. Because again, you use money to generate money in trading when you trade. True or false? But that's not an investment. The two look alike, but they are not the same. They both generate income, right? They both generate income. Trading generates income or profit over a short period. It could be even tomorrow when you trade. Even today, as you buy it, you sell it. You've seen that happen in what example do I give? Okay, let me use thrift business. Thrift. Okay, second-hand things. When you go to where they sell wholesale second-hand things, anything that it is, there are people who buy wholesale. So they just come and they open the bill for them, right? And they pick. Their prices are different from those who come and buy one. Because again, those who come and buy one, they don't buy bulk. So when you come as a single, when you buy just single items, your price is different from people who buy wholesale. And they do that in Turkey a lot. If you're a foreigner and you travel to Turkey, you will hardly get where you can buy. You know how you go to the West and you can enter a shop and just buy whatever you want, whatever quantity. If it's one, you buy. But in Turkey, it's a bit difficult. It's a bit different because many people who go to Turkey are wholesalers, and most of their shops, especially if you're a first-time visitor, are wholesale shops. So if you go to the shops, you won't be able to buy one dress or one shoe. You have to buy maybe like minimum of 3 or 6 of the same item. That's the only way they will sell to you. So sometimes in those situations, you end up buying from those who have bought. So a wholesaler is in the shop already, and he or she has made her orders, just like the second-hand clothing or second-hand products. They have opened bail for them, and they are picking. And you come and see one that you know how they lift it, and you are there watching, and you say, "I like this one." The man who has the shop will not answer you because there's already, he has a goal. What you can do is to tell the person who is picking to say, "I like this one," and the person will sell it to you instantly. Instantly, she has not even paid for it. She will just add some money and say, "Okay, maybe she bought it 500. She says it's 1,000." You will buy. That's trading. So trading does not need time to generate money. It could be instant, sometimes short term. Okay. So even though trading and investment generates income, they are not the same. Trading generates income profits over a short period, while investment generates return over a long period. Trading generates quick profits from price movements, fluctuations, and flow, while investment is about appreciation in asset value. Do you get that difference? Investment is an appreciation in the value of the asset. In trading, the product doesn't need to increase in value for it to bring you income. It's just a flow of money. So I go to Aba and buy this. I come back here, add all my cost, and sell it. It's still the same product. Nothing has changed. That's another difference. Next slide. Investment is not savings. You know, we've spoken so much about savings, right? So you know what savings is. But investment is not savings. Savings is money you set aside for specific goals. Most times, savings has minimal risk. Investment is wealth creation. And usually
it was
the
July.
risk is high.
Now is we are looking towards
If you take
August.
your money, like we talk about savings,
Amen.
you say, okay, I will save 5,000 every month. I will save 1,000. You put it in the bank or wherever you want to put it, or under your bed, or in your piggy box, or wherever you want to put it, or in a fintech. The money is there. The only risk you run is maybe wherever you put, if it's a bank, if they collapse, that's the risk you run.
What if I told
and even
you
when that bank collapses,
that all your problems can be
palliative.
It was
It might
July.
not be
Now
equal to your money because every
we are
bank is
looking
insured
towards
by the
August.
Nigerian Deposit Insurance Corporation. And so when a bank collapses,
Amen. Okay.
they pay some money to the depositors. It
Settled
might not
in.
be as much as you have paid, but you know there's a bit of accretion.
What if I told you
That's
that
the
all
only
your
risk you run in
problems
savings.
can be
Or maybe
solved
somebody
by
decides to do
only
fraud
one
on your
thing?
account, which is neither here nor there, because
Every problem you
the
have
fraud
in
is
life
done without your participation, the bank will pay, or
is
wherever you put
subject
it,
to
they will
one
pay you.
thing.
The risk is minimal.
What do you think it is?
Investment has high risk. The truth is that as good as investment is, there is always a possibility of a loss. That's you just have to bear that in mind. Investment is wealth creation. You're not, you know what I say, investment starts with savings. Yes, because sometimes you don't have that bulk money to just invest. You have to build it. That's why we talk so much about savings, because without savings, especially at this level where we all are, we don't get money in bulk. Okay, so I'll wait till I get 3 million naira. I will buy. I'll wait till I get 500,000. I'll buy, or 100,000 or 50,000. If you wait that way, you will wait forever. You will never be able to do anything, especially at this young age. But as young people, you can actually begin to invest by first starting to save. You understand that? First starting to save. Investment is not savings. Savings is money you set aside for specific goals. One of those goals could be to invest them. It could be to acquire maybe household things. It could be for anything, pay your rent, emergency funds, and all of that. And savings involves minimal risk, while investment is wealth creation. The risk is high. Every investment has a risk factor. We're talking about before you start investing. Before you start investing. I also want to add that investment is not Ponzi scheme. It is not Ponzi scheme. One day I was on social media and I saw a post. Somebody was saying, I have so amount. I'm looking for where to invest it. 80% of the comments on that post were about, there is this business. If you put 200,000, they will give you 1 million after 3 days. Or, there is this other one. If you put this, they will give you this. There is this other one. Just buy 3 of this and you will get this. If it's too good to be true, it is indeed too good to be true, which means it cannot be true. But because we are a microwave generation, we just want it na. When you tell somebody, Ponzi scheme has been there. It has been there, even in the West, everywhere. It's been there. In fact, MMM came from the West. The owner of MMM is not a Nigerian. He's a foreign man. I don't know which part of the world he comes from. And he's been doing that everywhere. It's everywhere. It's in the US. It's everywhere. Scam is scam. It's everywhere. So every investment has a risk factor. You must know your risk appetite. If you know this, you will know peace. Because you can invest your money and the asset goes down. The price of the asset goes down, goes lower than you bought it. It's a huge possibility. It's a possibility that is not far-fetched. For me, when I do an investment, I know at the back of my mind that this could go sour. And my investments have gone sour more than once. When the stock market crashed, I had a lot of stock. And it crashed. I think it was either 2006 or... It crashed. And it crashed so bad that something that was worth 1 million ended up becoming like 200,000. It was that bad. Investments crashed. When we were in Aba, when kidnapping started and became very serious in Aba, investments crashed. Buildings crashed. Like the prices came down. Land went down. There is no investment that cannot go down in value. Yeah, you could say, okay, some are harder to go down. For instance, real estate, houses, land. They are harder to go down, but they do go down. In that season in Aba, people were selling off their houses and moving away. People who build beautiful houses, they can't live in it. Because if you live in it, they come after you. What do you do? I know someone who was living in a flat. He's building 2, but you know how they build 3 stories. So he had the last floor with his family and his apprentices and all that. And then he now built a beautiful mansion in a better part of town. When he moved in there, he wasn't 6 months. Kidnappers came after him. The man ran. He was lucky they did not get him. After that, he moved everybody out of the house. He moved everybody out of the... Went back to his former house, his flat. And that house laid fallow for very long, for more than 3 years. In fact, it was fallow till I left Aba. He didn't want to sell it, but he couldn't live in it. I know another person who left his house and moved to Lagos. moved to Lagos. In fact, till today, I can't even see his shop anywhere. His office closed. Everything is closed. He has moved. The building that used to house his office is just there. I don't even know whether anybody is in it. You know how this thing, they say, that man, don't live in his house, so your money will finish. You know all those kind of things. They started telling those stories about the man. So the house is there. No serious thing is happening there. So, so long as it is an investment, you must settle it in your mind that there is a risk factor. And that risk is that the value of that investment can go down. And it can go down to the point that you completely lose all your money. You understand that? So you must know your risk appetite. Crypto is an investment. Crypto. But it is a very high risk investment. So if you don't have mind, just leave it. Leave it. There's no need. Because you will have hypertension before you even know what is going on. The next thing before you start investing is that you must have a bit of understanding of how the investments you want to do, how they work. You must have an understanding of how it works. What are the options you have? Do you understand? What are the options you have? That's how understanding works. So if you look at the options you have and you know yourself, it's not the one that if they tell you tomorrow, do you know you that bought GTB shares at 30 naira, now it's 15. Oh, your heart will jump so much that you faint. When the stock market crashed, a lot of traders, some died, some became chronically ill. Because you know how they say, this stock market is money mint, you know. You just put 1 million in 3 years, it gives you 10 million in 6 months. In fact, you can actually cash out, and and so traders that time in Abab, traders will carry their business money. Some actually took their capital and put in stock market. Some carried all their profits for the year and put in stock market. You know, traders are wise people. When at the end of every year, they do a stock taking. Whatever is extra, they know how they started. They know where their monies are. So I bought goods with 7 million naira. They will check everything, assets, liability, by themselves. They don't need auditor. And so then by December 31st, they know exactly how much money they have made for that year. They will take it out and buy some assets. Why do they do that? They will tell you that business is a risk. It doesn't always go good. It's not always prospering. Sometimes there are bad times. And when those bad times come, even like now in Nigeria, if you were buying 2 trucks of any goods 3 years ago, today you can barely afford half truck. Because inflation has eaten the money. And if you don't have a fallback, you're out of the game. You're out completely. So if you were a distributor, a major distributor at that 3 years ago, maybe among the highest or the medium, today, if you did not have a fallback, you cannot distribute anymore. Depending on the company you work with, you will be buying from distributors and reselling because your money cannot afford that bulk. And again, even the people who buy bulk, if you don't buy up to a certain quantity, forget it. You will not be able to sell because the people who buy the most will crash their prices and run you out of the market. In fact, if the cost price for distributors is 2 naira, everybody buys at 2 naira. But the more you buy, if you're in distributive trade, the more your commission. Those big ones will buy at 2 naira and sell at 2 naira. And depend on their because their commission is large, usually. You that you're buying you don't have, your commission is not plenty. So you buy at 2 naira, you want to sell at 205. You cannot sell at 205. Nobody buy. So that's how it works. So if you don't have that fallback plan, like, oh, my capital has gone down, let me sell this building, let me sell this land, let me sell this stock, or whatever it is that you have put away your money, you will leave business quickly. You need to understand the options you have, and that options depend on your risk appetite. That's why it is important that you understand a bit of what the things you want to invest in. You're not going to be an expert, but just understand how it works. So that tomorrow somebody will not come and tell you, oh, you see that stock we bought, the thing went down, no, and you don't even understand what the person is talking about. You understand? Somebody will tell you, come and invest in crypto. And they will tell you beautiful stories about crypto. Just be tapping something. Money will be entering your account. You don't understand how it works. You don't know that tapping, you can tap it for 7 years. You have not made $100. You will follow the niceness of what they are telling you and go and put your money. After 6 months, you say, where is the money now? They will tell you, don't worry. In fact, they will tell you, haven't you heard that one? They will just tell you one story. And that story is not false. That's how the market works. You understand? I have done crypto. Entering it, I knew that this one is a high risk. It could go down. I mean, it's been 3 or 4 years. We have not even been able to recoup the investment. Do you understand? They will tell you, oh, don't worry, it's coming. Every day they say, attend seminar. Join Zoom meeting. Follow this link. In fact, this person is coming to tell you the stories every day. On the platform, people are killing themselves. They are abusing the people. They are doing every manner of thing. But because you know that this is a high risk investment, you're not going to put so much. So that's the importance of understanding your risk appetite and a little bit about the investment. So that when they are telling you stories, you will not be so agitated that your mind will fail you. If you know that crypto is high risk, when they are telling you the story, you'll be telling yourself, it's okay. I knew about it before I entered. So calm down, my soul. Rest in the Lord. Because at that point, there is really nothing you can do. If you like, run beep. If you like, kill yourself. Nothing is going to happen. Set a clear budget. How much do you want to invest? It's very important. And let me tell you some of the importance of this particular point is that if you know how much you want to invest, you will start putting away money for it. Do you understand? Every day you say, okay, every month 5,000, every month 2,000. When you set that goal, you know your income. You know how much you can save within a period. If it's not much money, you can begin to look at some you can invest in with smaller funds and all of that. You don't have to say, because I have only 50,000. Let me just leave it until it gets to 500. You may never be able to get to that 500. So you need to set a clear budget. Once my money reaches 10,000, once it reaches 100,000, once it reaches 500,000, I will do this, I will do that. And because you understand how investment works, you can know exactly the one you want to follow. Do you understand that? Have a goal and understand your goal. There are many kinds of investments. There are some that are more short-term than others. There are some that are very long-term. If you have a goal and understand your goal, you will know how long you want to keep your investment is a plan. There are people whose work is just that investment. There are banks whose work, they are just investment banks. So it's a business. If you if you don't have a goal and understand your goal, and that goal will come from your little understanding of how investment works. For a trader that is making an investment, maybe buying property, he has a goal. Their major goal, first of all, is that in case business goes down, if there is a southward trend in business and they need to recapitalize quickly, they can always, lay hands on something to recapitalize. That's their first goal. The second goal is business can go down. Even though you don't need to recapitalize, you need to externally support your expenses. Are you understanding me? You need to externally support your expenses. You do that through your passive income. So you have a house. There's a rent. For some things, you could just assign those expenses to the rent. School fees, you can say, okay, I will pay school fees from the rent. That kind of thing. That's the goal of the investment, and they understand it. So for you, you must understand the goal of your investment. Do you want to invest for your old age? Do you want to invest just to increase your money for a season? Do you want to invest so that you can have financial liberty at a certain time? And, so you don't have to work so much or so long for people. Do you understand? After a while, I can actually collapse my investments and start this business that I want to do, or a part of my investment, and start this business. Are you understanding what I'm saying? That determines how you invest and what you invest in. And then I said you may want to consult a professional. You may want to consult a professional. Not that you cannot know everything the professional knows, but just a little bit of light will help you in the decisions you're going to make. What to invest in, how to invest, and all of that. And information is everywhere now. On social media, you can see people who are teaching these things. Some for not much money. These things are in levels. What somebody is teaching for 500,000, another person may be teaching for 5,000 because of their state. Maybe this one is up and coming. The other one is an influencer. All those kind of things. In fact, there are even free articles you can read online. There are free articles you can read online and be able to, pick up information. There are people you can even follow online that they dish out this information on a daily. Besides even taking, courses. You need to consult a professional sometimes. Then, a few other things I said. Beware of red flags. Beware of red flags. If it's too good to be true, then it's probably too good to be true. I've already said that. Somebody says 50% in 1 month. The question I usually ask them when they come to market me is, what do you do with this money that you will generate 50% of 100,000 in 1 month? Some will even tell you 2 weeks. What are you doing with this money? Once I ask you that question and they will start stuttering, they are just like they call it Ponzi scheme. So I collect 100,000 from the 6 of you. I start with that. I will now tell Zimozo, bring 100,000. I will give you 25,000 in 2 weeks. I will collect from another 6 people. I now have like 1 million naira, 1.2, right? Zimozo brings his 1 million. I'll tell him 1 month. In that 1 month, I will carry some of your own money and pay him. I will go to another 6 people. So I will just be pulling crowd and collecting money from them. As I collect, I pay those whose their own are maturing. Do you understand? So your own will mature in 1 month. By that 1 month, I have gotten 30 people. I will just pay you your 50,000. You know, that's all they do. There is nothing. Some will tell you, oh, we invest in gold. We invest in this and that. It's a lie. They are not investing in anything. We do Forex. We do this. Forex is a very high risk business that nobody should even put their money, if it is not your money, inside it. You know, like Pastor Mark said, it is something you have to be watching stock market. In 2 minutes, you could make $1 million. In the same 2 minutes, you could lose $500 million. And that's what somebody will carry another person's money and put. And you're sitting down and saying, my money is every month they give you maybe 100,000. Be chopping the 100,000 and chop it well. Because in the next few months, even that your 100 million or whatever you gave them will become stolen. So if it's too good to be true, it is too good to be true. There is nothing about it. It is too good to be true. When my sister did MMM for the first time, that was when MMM came out. She called me and told me. I said, when they pay you this one, she said no, that she put small money. I think it was 30,000. I said, when they pay you this, even if it is 5,000, don't do again. And true to it, when it was time for them to pay her, they were nowhere to be found. She kept calling them, and then suddenly they reappeared. I think they paid her after 2 or 3 weeks after the time they said they were going to pay her. Then now told her, hey, now we've paid you, now do again. She said she's not doing. Who should go? It wasn't 6 months. MMM crashed. They started telling stories. Oh, the money is in London. We put it here. We will get it. Don't worry. There is hope. Till today, the hope has become hopeless. So these are the things you need to bear in mind before you invest, so that you will not tell stories that touch. There might be stories that touch, but you will not tell it because you already know. In your mind, you know that there might be stories that touch. People lose money investing, but it doesn't stop them from investing. If you have this background at the back of your mind, you will not stop because something went bad. Because it went bad does not mean that it cannot go well. Don't put all your eggs in one basket. That means always know that it is better to diversify your investments. Diversify them. Don't just, there are various kinds of investment. So, don't put all your eggs in one basket. I think that's it for the mindset for investing. That's what I just spoke about, the mindset for investing. Before you start investing, what are the things you need to be careful about? So we'll use the remaining few minutes to take questions, if there are questions, or comments, if there are comments. Yes. There's a question here.
Thank you, Ma, for thank you, Ma, for the help.
No. The truth is that that's why you need to know about what you're investing. Investment doesn't really have missed gain, as it were. It depends on the goal of your investing. What's your goal? Is it just to increase your money? Or are you investing for the long term? If your goal is to increase your money, you're trading within the short term. If you're increasing your money within the short term, you're trading, you're not investing. It's possible for you to have regrets. The regret people have in investing is when, for instance, I was supposed to buy Zenith Bank stock during their initial public offer. I think it was 30 something naira. And I didn't buy because I really didn't believe in Zenith as it were. And today, Zenith is 74 naira 1 year after. I will now be saying, oh, if I knew, I would have bought. That's the kind of regret. But that does not mean that the window of public offer might be closed, but you can still buy. Investments are always available. And you bought little because maybe you didn't understand the investment. You didn't fully understand it. That's why you need to fully understand investments before you go into them. If you're buying something like mutual funds, you know that the risk is very minimal. Do you understand? The profit is not also that high. When you now understand your risk appetite, if you're that kind of person that does not have strong mind, do investments that are low risk. Again, depending on your goal. So it doesn't really call for that, regretting missed opportunities. You could regret if you understand a bit about investment, you will know that buying an initial public offer comes way cheaper than buying from the secondary market. So if you have money and you see an IPO, you will buy it if you believe in the company. There are some initial offers, not initial, public offers I didn't buy last year because I didn't believe in the company. I didn't put my money because I had put my money before, and those monies till tomorrow they have not even grown a bit. Rather, they'll be going down. When the hype of buy this bank, buy this one, buy this stock, I didn't bother because I already know that those companies are not doing well. You understand? Even if they have increased today, I will not regret because I know why I didn't buy. I know how those companies are functioning because I understand a bit about how investment stocks work. Mm-hmm. So if you understand a bit about how investments, that particular one you want to do works, it will help you not to regret that you didn't put much money. And then your goal for investing is what will determine, do I go all in or do I just go in a bit, not so deep? Yes. Did I answer your questions? Yes.
Good morning, everyone. My question is: you talked about investment on the old age. So talked about long. Is it old age?
Okay, you invest for your old age.
Yes. So I wanted to ask: is there any advantage to short term and long term that if you put in a money into for a long term, is there an advantage that you will not lose everything?
No. Yes and no. It doesn't have a straight answer because if you put in money in something that it was doing well, let's use land for instance. You bought land because land is something that hardly depreciates. You bought land, and all of a sudden, maybe you bought that land to build, or you bought it to sell, or you bought it just to keep in case you have need of money or anything, whatever your investment goal was. And then suddenly you hear that that erosion is chasing people from there. Do you get? And you have land there, and somebody comes to buy it. Will you not sell it? Even if you bought it for retirement, so that when you're old, at least you have a kind of income, you will sell it. Do you get? Because there is the investment will probably just depreciate, except something happens, except there's an intervention. Now, if you bought stock and you hear that, okay, let me not even go too far. If you buy, there are various kinds of investments. So if you bought stock and you hear that the company is having bought crisis or whatever, or their products have become contraband, whatever information that will affect that stock. I will give you an example. When I was in the bank, one of the banks I worked for did public offer, and they insisted that every staff must buy. We bought. They gave us loans. We bought that stock. And with time, the bank started going down. It actually went down to the point that it couldn't pay its depositors. And the stock price crashed. And we couldn't sell because it wasn't public offer. The company was not a public company. So it's not like you go to the stock market and sell. It was a private company. And we held on to those things. Sometime after a few years, we heard that the bank was trying to recapitalize. I mean, somebody was trying to buy the bank. And the people who were trying to buy the bank were buying up shares from the people who had them so that at least they could increase their own portfolios. People quickly started to sell. As much as there was a possibility that after they buy, the stocks will increase. Do you get? Because the bank will recapitalize and come back into business and all of that. A lot of people sold their own. They were not interested anymore. Whether it will grow after or it will not grow. Many people sold off their own. You understand? So there are certain things that will make you not want to, even though you bought it for the long term, intervening circumstances can make you not also use it for the long term. You decide to just collect your money the much. There are also sometimes when the thing is going down so much. In fact, like that clip that I was telling you, some people are already saying, if I can even get half of my money, I'll be happy. I will leave you people and go. Because I mean, they've waited for 3 years, nothing is coming. So if they see even quarter of their money, they will collect. And indeed, there are instances, maybe when we get into the investment proper, I will talk about those ones. There are instances where people buy up dying companies. They buy it. Companies are dying. Their price is nonsense. Investors buy it up and restart the business. So, did I answer you by any means? Any more questions? Okay. Thank you. We will stop here for today. God bless you.